Hey guys, it's your boy Blackrue back with another video. Cue my man Indigo Saint. Let's get it. Indigo Saint in the building. Blackrue investing. Let's go.
Who's this producer? Best believe it was Blackrue investing. With your money, you ain't gotta be guessing. Profits is what we manifesting. So we binge on our Blackrue investing. Best believe it was Blackrue investing. Dark horse in this race, we ain't resting. We got stocks, we got crypto with a blessing. So thank God for that Blackrue investing. Best believe it was Blackrue investing.
My man Indigo. So what's up, people? It's your boy Blackrue back with another video. You can catch me every Monday on Benzinga and every Thursday and Saturday on the Gentlemen of Crypto. The links and the times are in the description here. Today, I would like to talk about shorting. You go back and you do reflection, or at least I do. I always reflect on, okay, how can I do this better? How can I share things that'll help us do better in the market, achieve more in the market. How can I stay ahead of the pack, if you will, and share that to the listeners who trust and value the things that I say. So, I was here looking, pull this up. Your boy. So on the Gentleman of Crypto show here, April 30th, 2022. The name of the show is Tips for Spotting a Recession and Basic Charting Indicators. So, your boy was talking recession, uh, you know, almost 30 days ago when Bitcoin was almost $10,000 higher, sitting here at 38.5. And be honest, at this point, I was actually kind of mad because there were factors in this point with some of these guys talking around, some of these big guys, big wigs like Kathy Wood talking about how there was going to be a recession. So there were factors here in the March kind of time frame where we might have even been able to catch it around like 45, 42, right? So, so yeah, I was looking and I was thinking, okay, besides just catching the recession and getting our money into stablecoin, right? Which is very important. You wanna protect your initial investment, but moving past just protecting our initial investment, at the same time, a fact that um, we always forget is, pretty much any information is really valuable. And if we know that the market is going down, or we believe or suspect or can chart and make educated guesses that the market is going down, then we have tools that give us the ability to make money from that knowledge. And those tools are shorting. Okay? So shorting is basically when you're thinking the market's going to go down, when you're thinking it's going to be a bear market, you have the ability to short coins. Now, you also have the ability to short stocks. So, really, you can make money in two areas in that way, like coming over and looking at the chart here. So, um, also on Gentlemen of Crypto, we've been starting the show where we talk about um, stocks in the perspective of crypto. So, on that note, just to kind of pump that show, and I want you guys to go over to Gentlemen Crypto and check that out. Here's a stock called Riot. It's a Bitcoin miner, was as high as $80 at one point, now sitting at $6.84. Again, where I was saying March 30th was a point where we could have been tipped off there. Um, Even when your boy told you about it, it was sitting at about $10, right? But had we been tipped off around March 31st or whatever, we could have gone in here, or we could have gone and took a short on this stock. So first, I'm gonna go over shorting stocks, and then I'm gonna go over stuff where we can short coins. So as far as shorting stocks, so if we come over here and look at Riot blockchain, so this is a little bit of revisionist history, guys. All right, because it's kind of past. We can't do anything about it now. However, this in this revisionist history, we're getting ourselves prepared for the next short cycle. And on the same token, we are you can think about the inverse of this, right? So at some point, the market's going to go bullish, and what I and many others believe is going to be bullish around the next Bitcoin halving, which is sometime in 2024. But we can still get our bags ready until 2024. But you know, so just keep that in mind. But everything that we're doing is preparing us for the next situation. Everything we're doing is giving us knowledge that we can put in our tank, that we can put in our brain and have ready for the next situation. Um, like for right now, while the market's so short and bearish and down, we can build our bags for the next time it's bullish. But then the next time it's going to go bullish, right after that, it will go bearish at some point, and then we can take advantage of these tools. So, coming over here and looking at the options chain. Now, one thing for you to note here is the strike price. You can hit your strike prices and still have your option not be worth anything. So that's why, in my mind, I'm trying to hit, like, say for instance, I believe when we go, and I'm going to use the example of a call right now because it'll make more sense to explain. So right now, like, okay, the last Bitcoin halving was like May of 2020. So we didn't see this move for like an absolute like year, pretty much after the halving. Like, well, we saw it move 6 months after the halving. That let me correct that, but it didn't really get to its high until a year after the halving. So anything that we implement, we're going to really want to implement it so it runs like a year after the halving, really, because that's when we're thinking our highest point is going to be. We're almost back at the same spot that we were before the halving, right? So if we were implementing a call, um, we want to implement a call. We don't want to. We want to implement a call in a way that, say, if we're thinking it's going to go to $20, right? We want to implement a call where we pick a call strike price somewhere at 15 or like 10. Like if we're thinking it's going to reach 20, we're putting the call price or the strike price somewhere between 15 and 10. So that way we don't just hit it, we want it to go even further over it. Okay? Cuz like I said before, I've seen instances in which you hit your price, and just because you hit your price doesn't mean that your option is worth anything. So by going like a little under what we think it's going to hit, we're ensuring that our option will be worth something, basically. Okay? So, on the same token, if you're thinking that with a short, and we go back to kind of the March time frame, suppose like we're right here at 21-ish area, right? Or even say 20. We're like, okay, well, let's say 21. That's a better little point. So we're thinking it's going to go down to like $15. At 21, we need to pick somewhere in between here, like 18 as a strike price. So that way when it gets to 15, we know it's going to be worth something, right? So we're here at 21. We think it's going to short out. So we're going to pick something like, 18, 19, so that we ensure that the option is going to be worth something, okay? Now, let me really, really emphasize that when shorting, you really, really have to know what you're doing, because if you're using things like options, and when we go over to crypto and you use futures, there's a chance that these guys can get liquidated or be worth nothing. So you have to really be on top of what you're saying and what you're thinking, okay? And please, please, please don't put in any more than you're willing to risk, okay? So, using that on the same token, if we were somewhere way back if we were somewhere way back here in March, what we would have done is, and these prices won't be kind of like the same of what like the prices, kind of ignore the prices because they're going to be different. If you were around here at 21 and you were shorting, the short prices might be a little bit more than they are right now. But let's try to use this as an example. So let's say here I'm here and I'm thinking, wow, okay, it's at 21. I think it's going to short more. I had to give myself some projections, right? I would say, okay, a month out, I think it's going to be at 15. So what I would want to do is, I'm not picking a strike price for a month out. I'm picking it out like a month or two after that, so that I'm making sure my option does not expire worthless. Because if you pick it, thinking it's only 1 month out for this to get to 15, there's still a chance because there's time decay, right? On options. So the time decay will eat away the value of your option even more than you hitting the price, okay? So that's why you got to do projections and you got to give kind of like extra room on everything. So we're giving extra room on the time so our option is not worthless by coming out here to not May, but like June or July. So again, we can use this option as an example. Right now we're May 22nd. And this will give you kind of an idea about how much it would cost to go that far out. So saying, okay, we're in May, so we can go out 54 days. So that's a little bit more than a month. That's kind of making sure that our option doesn't expire. Like, and if we really wanted to, and we really want to make sure that our option doesn't expire worthless, we could go to the 117 days out from where we are right now. Hey Siri, what's 117 days from now?
It's September 16th, 2022 at 9:58 a.m.
Okay, so September, that's like literally 4 months out. Hey Siri, what's 54 days from now?
It's July 15th, 2022 at 9:58 a.m.
Okay, so that's almost 2 months from now. So that might be, if you're thinking it's going to happen in a month, that's probably the most comfortable cushion. So let's kind of do this in the opposite. So let's say, since we were thinking that it was going to go from 21 to 15, let's just say, for example, with Riot, we were thinking it was going to go. We got to use the inverse because otherwise the numbers won't make sense. Let's say it was going to go. We think it's going to go to 10, so we're going to get a call for 15. So in this case, we're going to go out of the money because this will give you some idea about how the cost of this would be. So we're going to go out of the money to, okay, so we're thinking it's going to go to 10. So in this case, if we're thinking it's going to go to 10, we actually want to get a call for somewhere in between where it is right now and 10. So we would want to get like the eight strike price, or the eight strike price, or the 8.5, and 54 days out. So they only have an 8 for 54 days out. That would be $100. And we would just have to wait. And also, you kind of want to make sure that you're gonna have like some liquidity there. Like, you almost kind of want to get the ones that have the most uh, op op interest in it. It just means that there's more people in here. So in this case, you might want to get. You think it's gonna go to 10. You might want to get just the one that has a 105 on it, where it's like more people in that one. So you might want to get the 9 instead of the 8. Either way, I'd probably just get the 8 just to be safer. So so you could either get the 8 or the 9. So that's how we do that. Now, if it was on the other way around, I can't really show you because, okay, I guess, okay, we can do it like this. So it says $6 right now. Let's say that I thought it was gonna go to $2. I don't think that, but let's just say that I thought that. So if I think it's gonna go to $2, looking at the puts, I would get like either the 3 or the 5, and you can see there's some interest there. There's some people there. It's like 400 something people there. Um, that's 33 days out. We want 54. So you can see here, if I thought it was going to go to $2, like most people here are not even thinking that low. I'm not thinking that low either. I'm not thinking it's going to go there. But let's just say you see a little amount of people here at $5. So they're here at $5. Maybe they think it's going to go to 4 or whatever, right? Um, which would probably be a good marker, because if we come out here 3 years ago, I think it was here under 4. Let's go. I'm not saying to make this move. I'm just giving you guys an example, all right? So I just want to be very clear on that. I'm not saying to make this put. I'm just trying to get a really good example for you guys. So back before, after it like fell, and it was at like $6. Took a couple okay, took a couple months, but it ended up going to 2. I'm not saying that we're gonna do that. Not saying we're gonna do that. But in that case, and it took like a month to do that, I believe. Let's go back to it and just confirm that. So it was at about 6 at one point after falling. And that was July. So July to October. So it took it. July is the 7th, October is the 10th, so it took about 3 months. So in our example, that I'm not suggesting that anyone does at all. Uh, in our example, it took 3 months. So here this is out to September, not October. So we would get the like 5 because we were thinking it's gonna go to 3. So we're not gonna get all the way down to 3. We're gonna get the 5. Kind of makes sense. But we wouldn't get it in such a short. If we were thinking it was gonna take 3 months, we really want to get. Hey Siri, what's 208 days from now?
It's December 16th, 2022 at
Okay.
10:05 a.m.
So really, if we were thinking it was gonna go and it was gonna take till October, we would want to get this one. We would get the 5 put right here because that's December. That's giving us 2 months. We would get this put right here. If we were expecting it to go down to $3, we would get the $5 put. Okay, because right now it's at $6, so we're right in between. Right, and on the same token, we gave you the same explanation on like for a call. It's just an inverse. So that's the one for a stock. Now we got to do the one for a coin. Let me make sure. Let me come over here and put it on face so you guys can't see the screen. I want to make sure that my KuCoin is up. It's not giving any of my personal information. And we can kind of go look at KuCoin futures, right? Okay, the way that KuCoin does its futures is it kind of gives you you can leverage to a certain point, right? But to that certain point that you leverage, your liquidation point kind of shrinks, okay? So for instance, and again, I'm not saying that you do this, but let's just say for instance, I thought Cardano was going to, or let's say Fantom, okay, Fantom. Let's say I thought Fantom is going to go down to 20 cents. So I come over here. Okay, it's not exposing any of my information, so I can come back over here and go boom. Or at least I don't think it is. Okay. So I will go over here to Fantom. Saying, okay, Fantom. It's at 41 cents. It's giving me this whole tutorial. Let's say I was thinking it's gonna go to 20 cents. I want to leverage out to a certain point, let's say 3. I'm gonna buy it. I'm gonna sell short, so I actually wanna. So sell short means you're gonna buy it. So when you short, you're actually selling, and to close your short, you buy it back, which is kind of a hard thing to think about, right? Um, but that's what you're doing. So if I'm leveraged out 3, I don't know, let's just say 2. We're gonna buy 2 Fantom short. It's gonna tell me, okay, that's gonna cost me $0.28. And my liquidation price, see, that's the important point. So my liquidation price, if Fantom goes over um, 55 cents, my stuff gets liquidated and they take my 28 cents or whatever, right? So really, you're over leveraging. What it would normally cost to buy two Fantom right now is like 80 cents. But since I'm just let's see. Okay, whatever. I'm not gonna buy it. So there's a little weird thing with the cost. Like, so say I'm leveraged three times. Normally, buying three Fantom would be, or this is if I'm buying six Fantom, but it's only gonna cost me two Fantom. Okay, so I'm leveraged three times. Now, say I wanted to come out and leverage myself eight times. But that makes my liquidation price be 46 cents. So you see how it shrank? Like, it shrank drastically, right? Because now Fantom's at 41 cents. If it goes to 46, I get liquidated. 46.5. But I'm way over leveraged, right? I'm eight times over leveraged. Now let's say if I go down to two instead of eight, and I'm selling short, my price now, my leverage price now is 62 cents. So you see, it's kind of a game here, and you can see certain times too where they got these sticks where it goes up to a certain point in these sticks of the prices. A lot of times that's like they almost know where the shorts are and they can just liquidate them like that. So that's one thing that you really have to pay attention to. Just like here, the one it'll show us that the most is probably Luna. So that's what happened. They kind of play games here to keep us not from shorting this. But like you really have to take it into your head, like I was saying earlier. Um, you got to change your mind on the short type deal, thought of short, and think of it more like what information do I know that I can take advantage of. So there were various times in this point where we could have put a short in, but it would have been somewhere, anywhere right here where we could have put a short in. Any one of those spots, we've been very happy with ourselves to put in a short on Luna. But as it dropped all the way down here, it kind of, all these people got thrown out of a short from right here in this area. Because I'm sure some people tried, and in this area, they cleared out a lot of short interest. So you had to be the person that was like really going to risk it for your biscuit up here. But that's one of the things we really have to look out for. And then they cleared out some more people right here and right here. So you really got to be strong with your convictions and really just know what's happening um, to do this deal. Um, so it's very, 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 very risky, but it is something after just saying, okay, I think the market's gonna fall from here. I did my research. All the big guys like Kathy Wood or Elon Musk are saying something about recession. I'm looking at the chart and I'm using my second level tools and stuff like that. I'm looking at the chart here in March and I see it's at the top of Wyckoff. I see it's overbought. okay, at this point now I feel comfortable putting out a short. So use all your tools, use all your information. Know that there's a possibility that you can get liquidated, um, and then make your move. Okay, um, but that's only if you're feeling comfortable enough to do certain things like that. Uh, it is very, very, very risky. But the first step always is to, if you're thinking that it's going to be a bear market, is to protect your initial investment and just get your stuff into stable coins so that you don't have to ride out a $10,000 drop or another $10,000 drop. Okay. Um, However, at the point we're at right now, and if we're thinking it's gonna be another it's bear market. I don't think with all the other, and this is just an aside from what we're talking about. I don't think with everything else that's in Bitcoin now. Now we got Bitcoin publicly traded assets and all this stuff. I really don't consider it going back to a 12,000 or an $8,000 Bitcoin. I think there are too many companies in it at this point right now, um, for it to go this low. If anything, if it goes any lower than this, we can probably expect for it to go to somewhere in the 20s. But it's not going any lower than 20 in my mind. So we'll see what happens. Right now, it's just going sideways. Um, but in my mind, if it's gonna be a 2 year bear, we'll see. But it's not going lower than 20 in my mind. So let me know what you guys think about this episode. Let me know what you guys like to see in the future. Check out some of my previous videos right guys, thank you so much. This is a really, really long video, but it's very important that I made the information clear to you guys. More is better than less in this case. Thanks so much for watching. Have a good one. Peace.